Let's move on to Standard Bank. Okay, this one used to be the largest by market cap, but it sort of slipped somewhat. Still one of the largest players in our market by assets, of course, and by market share. In other words, the banks measure themselves in terms of who's got market share of mortgages, who's got credit cards, who's got retail banking exposure, who's got business exposure. 20% shareholder base here from China's ICBC. Remember, many years ago, the Chinese came and bought a nice stake there. So that is an interesting global alliance. In the meantime, what Standard Bank has done is to get out of its international assets, like in the UK, like in Russia, like in Turkey, like in Argentina, but it has broadened its footprint in Africa. In parts of Africa, of course, it trades as Stanbic, because for various reasons the Standard name was associated with Standard Chartered. Market capitalization 235.3 billion rand. So that's coming down from the close to 300 billion that FirstRand has now. Price to earnings ratio of 12, dividend yield 4.41, also pretty solid. Joseph, your thoughts about Standard Bank?
Pretty close to FirstRand from a dividend yield perspective, but remember they own in Africa it's called Stanbic. In Nigeria they own about 53% of the Stanbic operations there. Again, they are facing charges from the regulators in terms of...
I haven't followed that, but what's that about?
Well, they say
it's about transfer pricing or something.
It's basically like what MTN, I think, before these new charges on MTN, is about the management fee or consultation fee between the head office and the local. So certainly they are under investigations there, and Stanbic Nigeria might be fined as well, just as MTN is being fined. So certainly I think it's not looking good from that perspective. From their disinvestments from Argentina and other, I think it had helped Standard Bank to try and solidify and also keep their market position as Barclays gave all the African assets to our ABSA, which is now obviously the Barclays Group.
Okay, but a couple of years ago, people used to say, listen, FirstRand is not really in Africa except by arriving from the airport with a suitcase. I know they've done a bit more since then. Conversely, Standard Bank was much more active. They went to all the trouble of getting actual bank licenses in places like Angola and all the other sorts of countries that are around. And they said, look, it's expensive because you've got to then capitalize it. But in time, we will get superior returns from this strategy. Now, what you appear to be saying to me is it an advantage? Will it be an advantage? Is it still an advantage? Is it going to be an advantage soon?
Well, I think if you've been in Africa for longer, certainly you would have had an advantage given the fact that people are saying, well, Africa is rising, this is a new emerging frontier. But I think the policy issues and regulatory issues in Africa, we need to make sure that there's consistency in there, not to threaten businesses. And there's also massive unemployment. So once you start threatening investors, certainly they're not going to come and aid your country. So FirstRand also have taken that obviously step to get into Africa, but certainly Standard Bank, because it's already a known brand, they'll have an advantage.
Let's have a look at the share chart. So it looks fairly similar, not nearly as successful as FirstRand in recent years, which is why it's been sort of lapped. And then the same slump to the end there. So I guess we're picking up a common theme. And I suppose also there's a sense that maybe the South African consumer's a little bit stretched and stressed. So therefore, some of the repeat business in the loans environment and in the credit card and the mortgage environment is going to be a little bit tough. But at the same time, fairly solid sort of earnings. Hot or not?
I won't be hot on this one. Not hot.
Pass. Okay. I'm going to go with not hot too. I think that's fair enough.